This is the Scrap Metal and Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, April 3rd, 2017. This is Ron Ostrowski reporting due to Greg Brown is on his way back from India. Last week, commodity prices and economic reports were mixed. Oil rose $3 to $51 a barrel, almost double the $27 of last year. The U.S. continues to ramp up drilling and pumping as OPEC has mostly lost control of prices. Unless there is a major disruption, oil could stay below about $60 for years. Oil rigs rose to 662, more than double about 14 months ago and the highest level in a year and a half, helping stabilize commodity prices, and this remains great news for jobs. Note, the rig count is still down about 59% from 2 years ago, meaning great upside. Iron ore fell $3 a metric ton to $81, a multi-week low. 2016's dramatic run-up is adjusting to the reality of a low-growth market. Scrap ferrous prices remain steady. Prices will be down in April with no clear indication as to how much. Importantly, though, the U.S., Europe, and Asia are all growing. Hot-dipped galvanized steel held at $908 a metric ton on good volume. Rebar prices have fallen in recent days due to low-cost imports. For months, stainless 304 scrap has remained steady at 37 cents a pound on no news. Copper rose 3 cents to $2.66 a pound, with continued slow growth and weak U.S. dollar being factors. And the 5-year chart shows we remain near about 2-year highs. Copper inventories remain elevated, which could put downward pressure on prices. Aluminum rose a penny to 88 cents on good demand as construction, aerospace, and automotive all remain strong. Importantly, the 5-year chart shows aluminum prices hit a new multi-year high. Aluminum inventories continue to fall, hitting about 9-year lows, keeping upward pressure on prices. Inventories are about 1/3 of what they were a few years ago, and it is not clear when and if China's reported overproduction of aluminum will affect prices. The U.S. dollar rose in recent days, but hit a 4-month low last week due to economic uncertainty. When the U.S. dollar declines, by translation, commodities priced in dollars rise. China's Caixin Manufacturing Purchasing Managers Index fell to 51.2, with over 50 being expansion. This was based on strong exports, but prices and employment are declining. U.S. corporate profits finished 2016 on a strong note. It was the best quarter in 2 years, a major positive for the economy. U.S. economic growth in the fourth quarter of 2016 was revised upward to 2.1% from 1.9%. Leaving out the usually strong third quarter, this was the fastest growth in a year and a half, driven by increased personal consumption and real estate investments, but dragged down by reduced exports. U.S. Manufacturing Purchasing Managers Index fell a bit to 53.4. But with nicely over 50%, manufacturing continues to expand despite a slowdown in new orders and input cost inflation. The Consumer Sentiment Index rose a bit in March to remain near multi-year highs, which is great news going forward at least 6 months. The Dow Jones average rose slightly and remains near all-time highs. The Trump administration stated that the $1 trillion spending program, while delayed, is still planned for 2017 introduction, which will help the economy. Greg thinks India is a sleeping giant. While there are reports of economic softening in India, their 7.1% economic growth is faster than China's 6.7% and the U.S.'s 2.1%. Also, despite India having 4 times the number of people than the U.S., their economy is only 1/8 that of the U.S. Enormous upside. As always, feel free to call or email Greg with any questions, and we hope all have a safe and profitable week.